right, I'm about to walk you guys through a trade where I made 500 ticks on MNQ in less than 30 minutes with my super simple trading strategy. It's called the top-down model, and it's so simple, even a 5-year-old can do it. So effectively, it's going to have 4 parts. 1, what is your higher time frame bias? 2, what is your intermediate time frame bias? 3, is it the right time of day based on your trade? And 4, which is the 22 model. And I'll show you guys what that means. Now, you can see here on the 4-hour that we had SMT with ES. ES failed to take out this low, but NQ did swipe this low. And so that is indicative of a reversal. We also had a rejection wick formulate after taking out this low. So that means my 4-hour is bullish. Now, as the higher time frames, I also want to confirm that the 1-hour is bullish. That's part of my higher time frame analysis as well. Now you can see here on the 1-hour, after we swept those lows over here, you can see that we now inverted this 1-hour FVG, turning that into an IFVG. That is also a bullish sign because we are disrespecting bearish price action. So now I know my higher time frames are bullish. Now let's look at the intermediate time frames. That would be the 15-minute and the 5-minute. Now on the 15-minute, you can see that we had some consolidation, swiped these lows, and then started to progressively move higher. And that is further confirmed by the fact that we created this 15-minute bullish order block right here and leaving these gaps open. And now that those gaps are staying open, that is likely to become what we call a breakaway gap, where price is going to break away and continue higher. On the 5-minute, we had some consolidation and then a really sharp, aggressive candle higher here, closing well above these highs, also indicating to me that price is bullish. So now I know that the higher time frame is bullish and both of my intermediate time frames are looking bullish as well. Now comes the time of day. This trade I took in between 10 to 11 a.m. That is what we call the AM session. And in the AM session, there's likely to be what we call the AM trend. Effectively, price starts to trend in a certain direction that it's going to for the rest of that session. And it's already looking like that session is going to be a bullish trend. So now the first 3 parts of my model are all screaming at me bullish. So now it's just time to find a bullish entry. So I use to enter what is called a 22 model, but you can use any entry technique, turtle soup, IFVG. As long as the first 3 parameters line up, you can use any entry technique that you want. I use the 22 model exclusively. Effectively, what that is when you have a high like this, and then you have a purge of a recent low, break of market structure, and then a fair value gap that price returns back to and starts to run away. So you can see here, we have 2 22 models that form here. We have this low, this high, lower low, swiping these lows, and then a break of market structure above this high with fair value gap. First entry can be right here. Stop loss goes below the protected low. And then as for where you can target, there's relative equalize here, over here on the left. That now formulates a nice 1 to 2. Similar entry right here because you have this low, high, lower low, break of market structure. Fair value gets a return back to. Stop loss, you can tighten it a bit. I don't want to see it now that we've closed well above these highs.